So we're live. Thanks for tuning in once again. But before I jump into the business of today, so I just want to, there was something I was supposed to talk about last week in last week's webinar, which was how to skim through all the currency pairs to be able to now choose which one to trade for the incoming week. I forgot because of the questions, I guess. I completely forgot to mention that. Now, what I usually do, how I look for the best setup. Now, I'm talking about last week's webinar, all right? So how I look for the best setup. Someone is blowing up my phone. Okay, I'll reach out to you after the meeting. I'll reach out to you after the meeting. If you're on the call, please, I'll reach out to you. So, how do you, because that's particular, if you've not watched the recordings, please go back. The link is on the Telegram channel. Please try to click on that and look it up. So, but I really didn't talk about how to skim through your pairs, all the pairs, to now look for the best one. So I'll quickly go over that before we jump into the business of the day. Today's webinar is actually going to be a short one, actually. So, but it's important I go through this. So what I usually do over the weekends or during the weekends is this. Remember, this was that trade I talked about that I was currently in. Price was still trading around my entries at the time when we did that last webinar. And yesterday, day before yesterday, price moved significantly. So price came close to my close to my take profit. I actually took partials around here because CPI for AUD came out yesterday, or let me say early this morning, around 1:30 a.m. You know, it's the Asian AUD, NZD are both Asian currency pairs, so they move. Their fundamentals usually come up during the Asian session. So because of that, I took partials around here. I was awake. I went out with some friends yesterday, so I came back late. So I took partials here before I went to bed. I think a few minutes after 1. No, a few minutes after the news, rather. That was when I took partials. But I still expect price to fall to our take profit. But what I'm trying to say here is how do I look for these pairs? I go to the search symbol. So first of all, let's give it a moment to load up. So I come to, on trading view, I come to Forex. Then I click on this Forex tab here. So you know that on trading view, if you're familiar with trading view, if you're not a beginner, if you are a little bit advanced, you know we have different brokers. So what I basically do is, I actually do this on my mobile device most of the time, but I should be able to look for it here. So yeah, all sources, come to all sources and click here. Just click on that all sources and type just one broker. So your own may be FXCM, your own may be another broker, but for me, I use Owanda. So I'll just say, hey, show me currency pairs on one broker alone, Owanda. So I click on Owanda. Then I go back and click on this search bar here. I'll start from any random pair. I'll delete everything. So here we have Euro USD. So instead of typing Euro USD, I'll just type Euro. Then I'm going to skim through all the pairs under Euro, except for exotic pairs like Euro, Polish, Euro, South African Rand, and stuff. No, I won't do all of that. I only go for major pairs like Euro USD, Euro JPY, Euro AUD, which is a cross-currency pair, Euro GBP. I'll look at all these other pairs that make sense, except for these funny-looking ones, Singaporean dollar and stuff. So I don't go for all those ones. So I just look for Euro pairs against another currency pair that is popular in the market. Whether cross-currency, it doesn't matter. But I don't trade exotics. All right. You can choose to trade exotics if that's okay by you. It's completely fine. I'm not saying you have to do exactly what I'm doing, but this is how I skim through. So if I go to Euro USD, I'll look at the pairs one by one. Now my time frame is going to be on the weekly time frame. My time frame is going to be on the weekly time frame. So I'm only looking at one time frame. I just want to see a dodgy candlestick. Then if I see a dodgy candlestick, I want to see if it is at a premium level, either at a level of support or resistance, just like I explained in the last webinar. So if I don't see here, then the next currency pair I'm going to type, I will delete this. from the search bar, then I know that the next is GBP USD. So instead of typing GBP USD, I'll just type GBP. Then I'll go through all the currency pair under GBP, except for exotic pairs like GBP South African Rand, GBP Turkish Lira, GBP Polish currency, blah, 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 except for the exotic pairs. But whether it's cross pairs or major pairs, those are my interest. All right. So if I'm done with GBP, I'll delete it again, then look for maybe USD JPY. So in this case, I'll just type USD instead of USD JPY. Then I'll skim through all the USD pairs. So this way, it's faster for me to scan through all the currency pairs. So I'll just type one currency. Then because I've selected just one broker, so it's easy for me to just skim through. So this is what I do over the weekends when I'm trading this strategy. This is what I do over the weekends. I'll just type one pair, then I'll quickly skim through all the pairs to see so now when I am skimming through all these pairs, I may see multiple dodgy candlesticks. I may see multiple dodgy candlestick patterns. So what I will do is I will write out all the currency pairs that has the dodgy candlestick patterns. Then when I write them out on a list, now I have them right on a list. So what I now do is after skimming through all of the pairs I'm looking at, I also look at oil and gold. I've not started including silver, so you could include silver, all the metals. You could also look at crypto if that's your interest. I really don't like trading crypto. If you ask me why, I actually don't. I think it's just based on interest. It's not like it doesn't move. All right. But even if I want to trade crypto, I only trade Bitcoin, Ethereum. Except maybe there's an information from one of my crypto brothers telling me, hey, invest in this, then I'll just go in with proper risk management. But I'm not really big in crypto. All right. If I must trade crypto, I only trade BTC USD, Ethereum USD, and maybe Litecoin USD. You may laugh at me, but that's not my strong thoughts. All right. I have to be honest. Okay, but you can apply them in this particular strategy on those major cryptos. All right. So, what was I even talking about? What was I talking about? So I was trying to talk about, yeah, after writing all the dodges I find on a piece of paper. So because not all the dodges are going to play out, right? So when I write all of them out, what I want to do is I will now go and perform proper analysis on them. So I'll look at it. I'll look for the one that is more valid. By valid now, I'm talking about the one trading at a major support or resistance level. So that's the one I will look for. I could see multiple dodgy candlestick patterns, but I'm looking for the one that is forming at the right spot. Now, that is my interest for the incoming week. That is the one I want to be trading in the new week. All right, so these are stuff you can rewatch this video because it's recorded anyway, so that you can add this knowledge to what I talked about last week. All right, so I forgot to mention this, and it occurred to me, and I was like, okay, in the next webinar, which is today, I'm going to clarify that. All right. So I see some hands raised. I'll just take one question, then we'll jump into the business of today because, like I said once again, today's session shouldn't be more than 30 minutes. I'm talking about what I have to talk about today. It shouldn't be more than 30 minutes. So I'll go with Esther Babatunde. You've been allowed to speak. I see your hand is raised. So just go ahead, unmute, and ask your question, ma'am. Okay.
Good evening, sir.
Oh, that's you. I'm sorry. Last week you said you're not. Okay, yeah, go ahead, please. Good evening, sir.
Good evening, sir.
Good evening, sir.
Number one, I couldn't get the link. The way you said it to Let's Trade. I searched. I was able to get one in London or things like that. So I couldn't get your own, sir. That
Okay,
is number one.
you searched on Telegram or on YouTube. I'm not getting it.
I typed in on Google. I searched on
Okay.
Google.
Okay, what you're going to type is this. Let's trade 10x.
Let's trade
10x.
then.
What do you want to have access to? Is it you want to come to my
Yes, that you say I
DM
should
or
personally
YouTube?
I should dim you.
Okay. Okay, yeah.
And
I actually sent out the link after that day's session, or was it the next day? I sent out my direct DM link. All right. Or another way you can get to me is when I post on the Telegram group, just tap on my icon or my profile or something. It should be there somewhere. But after today's session again, I'm going to send out the direct link to my DM. So I did it last week, but I'll repeat it again today.
okay, sir. Thank you, sir. Then there is a pair that I'm trying to look at. That is GBP card.
Okay, yeah,
Uh,
that will not be today's session. You understand? We could talk about this since today's session is for something else. I just wanted to add to what I didn't say last week. So maybe I'll take your question after the session.
no
So
problem,
please,
sir.
yeah, just put it somewhere so that you don't forget. So after the session, we can look at that together
Okay, sir.
so that
No
we
problem.
just don't go off grid and you
No problem, sir.
understand, sir.
Thank you, sir.
So you're welcome, sir. All right, so let's just jump into the business of the day. Then I'll take questions after. All right, let's jump into it because some people may want to go and watch football after this. I don't know why I keep fixing our webinars during the days of football, but it's all good. So today I want to talk about how to be consistently profitable in the market, because when we talk about consistency, some people think you can grow to a certain level as a trader and never lose trade and never go into a bad time, never go into a drawdown. That's a lie. All right. There's no master of this market. We are all learners in this market, myself inclusive. All right. So that's why you will notice that on my platforms, I don't talk as if I'm the boss of the market. Like, I know this is going to do this 100%. That's a lie. I don't know. I don't know. No one knows. All right. That's why as traders, we just want to focus on what we can control. So what can we control? What's within our control? What's within our control is our risk management. Hey, this is what I want. I'm willing to risk on a particular trade, and my rules have been met. I'm in, point blank, period. Stop loss set, take profit set. Is now in the hands of the market to go to my take profits or my stop loss. The only thing I can control is what I'm willing to risk on that trade. The only thing I can control is my edge. So I know that, yeah, I could go for for a 3 losing streaks. It's possible. But I could say, okay, after 10 trades, after 20 trades, I will end up being profitable. That is what I know. That's the fact that I have. But on a trade by trade basis, no one knows the outcome of a single trade. All right. If you know, you should be richer than Elon Musk. So my name is Shola, by the way, for those that don't know. And I've been trading. In fact, I trade for a living. That's what I do. I don't do any other stuff. All right. So I trade for a living. Any other thing I have today was proceeds from trades. All right. I still go into other businesses, but whatever I'm doing today, I got the money from trading, and that is why it is not a scam, which is what brings me to the next slide. What comes to your mind when you hear of the word Forex trading? Scam. Trust me, scam. I was with some friends yesterday. One of them is still calling. One of them was calling me a Yahoo boy, because he doesn't have the ability to comprehend the fact that you can make money clicking buttons. And I believe not just me, many of us right here, you probably know some people that says Forex is not possible to make money in trading, blah blah blah. Is this Igbo guy, he sells transformers, so he doesn't know much about internet. He doesn't know much about making money from the internet, so you won't blame him. But it's natural, because I also felt this way when I came into trading, like Forex, it's a scam, right? But again, if you are knowledgeable already, like you know that you can actually make money in Forex, then this is what will be in your mind, the fast cars, the bougie lifestyles and all of that, right? Fast cars, money raining all over. This is what comes to your mind. And it's true, not like all of these things is not achievable through Forex. Of course, you can achieve all of these dreams through Forex. But that mindset derails us from the fact of what Forex actually is. Forex is a business. I'm going to talk about the business side in the next couple of slides. All right. Forex is a business. It's just like any other business. The more you put in, the more, and if you're good at it, right, you have the right mindset, the more you make. But when we talk about Forex, people want to put in $20 and make $1,000. You probably even follow some influencers on YouTube that is telling you that it's possible, showing you some fake results. Showing some fake results. There's some people who say they are taking X amount of money to 1 million, blah, blah, blah. There's even a video I wanted to make on my channel. I don't know. I've been busy. I'm going to make that video. Someone DM'd me. I'm not too good when it comes to tech and all of that. But someone DM'd me the other day and was telling me that I should pay a certain amount and I'll be able to I think in the next webinar, I'm even going to put the video. I'll play it so that we can see. I'll put the video here so that I'll play it so that you can see the video so that you know what I'm talking about, where I can simulate entries. Like I'll just get in at a certain level after price must have moved. So I'll get in under and just show my followers that, hey, this is the X amount of money I've made. I wanted to delete the message. I said, let me keep it. I'll make a video on this. It's crazy what's happening in the industry. So it's not like this is not possible, but trading is a business. Trading is a business. So the more you invest, the more you make. The less you invest, the less you make. I'm going to make it make sense in the next couple of slides. All right. It's just like that. Forex is just like the normal business. If you're an entrepreneur, the normal business we do, right? Maybe you have a supermarket or you sell spare parts or whatever. You know that the more you invest, the more your profit margins in cash. That's all it is. Well, let me just go to the next slide so that I don't explain everything on one slide. So is Forex actually a scam? So let me disabuse your mind. It's not like it's actually a scam, right? Because I make withdrawals. Some of you on these calls, on this session, on this live webinar makes withdrawal too at one point or the other, right? So I'll just quickly show off a little bit. This is true Forex funds, though they've gone under. It's a prop firm. This is a withdrawal made at a certain point in time. This is history right now. This is E8. This is history too, because this withdrawal is from last year or so. All right. So this is a recent withdrawal I made this month. You can see the date here, 10/10/2024 on E8. And when I'm funded, I trade all my trades are on a copier. So whatever I trade here is replicated there. So it's not a scam. We make money from this. You make money. You can also make money from this if you are not already. So I think I shared this slide last week. This is a slide from one of my students with his withdrawal from last week and all of that. You can see it here. So it is doable. But we need to have the right approach. You understand? That $5,000 that you saw there from my recent withdrawal is not 100% profit. It's not a 5K account. It's not a 5K account. It's a $200,000 account. Sorry, I said $200. Sorry, 100K account. All right. So 5K is just 5%. I'm not trying to double the amount. I'm not trying to take $100,000 to 1 billion. So when you approach Forex that way, you know that I mentioned something in last week's webinar when I said my mindset changed. Was it on last week's webinar or one of my sessions? So I also mentioned it in last week's webinar where I said my mindset changed the moment I started watching some of these top tier prop firm traders, I'm not talking about these online prop firms. I'm talking about those prop firms, brick and mortar prop firms, hedge funds and all of that, where they were celebrating 20% for the whole year. And I was like, are you crazy? 20%? Then that was when it hit me that 20% looks small because back then I was trading $100 accounts, $200 accounts. So 20% of $200 is just $20. So I can't celebrate $20 for the whole year. It's crazy, right? So it dawned on me that, hey, these guys manage billions of dollars. So 20% is massive. So me in my one room apartment in one corner is trying to flip account against the same traders. How? No wonder I'm not even profitable. So approach it like a business. Approach it like a business. When you see bank statements and their spreadsheets and all of that, they'll say this quarter we made X amount of percent in profit. Sometimes it could be 100%. It's not like it's impossible to do 100%. Don't get me wrong. I explained how we can do 100% in last week's webinar, right? Through systematic approach, risking a little bit more. It would even risking 4% with a good strategy per trade. In no time, over 3 months, you will double your account. So I'm not saying it's impossible to do 100%. Don't get me wrong. All right. But first of all, treat it as a business. Treat it as a business. All right. Treat it as a business. That's how you changes your mindset. So the bigger your capital, the bigger your profits, obviously. Because we could both do 10%, 10%, but the monetary returns, mine will be greater than yours if I have a bigger capital. But at least we made the same percentage in profits. That shows that you are not a bad trader. You're already doing just okay. You just don't have capital. Then at least you know what to do next. Get capital. Now, how do you become consistently profitable in the market? That's what I've been saying since number one, set realistic goals. Don't be that kind of trader that wants to double your account within the shortest period of time. That was why I sent out that short clip yesterday. Most of us wants to get fast returns quickly within the shortest period of time. How have you fared with that mindset? How? No, you said it's possible. You're watching a YouTuber that is doing it. You're watching somebody that is doing it. You think that person is smarter than you. There's no smarter person in this market. As long as you can get the skill, no one is smarter than no one. Yes, you can make more money than me averagely. I have some of my students that makes way more than me. And it's simple because they have a larger risk appetite. It's simple. But that doesn't mean me that actually taught them is also not profitable. And we are different in nature. Yeah, I told them that they make way more than me in terms of percentage. So which means if they have access to the type of capital that I have, they would perform way better than me. And it's absolutely fine. But as long as you are consistently profitable, you are okay. Someone should be on this call right here. He was complaining to me yesterday how he has been trading a prop firm account for is it 6 months or 7 months. He has never gone, he's not in a drawdown. He even said he has never been in a drawdown, but he's getting frustrated for not passing. He even told me that he has made 6% twice, but came back to break even. And I told him, I said, you are doing okay than many traders out there because as long as you can sustain an account, fine, you may not be making money, but you are not blowing the account. You are already better than 80% of traders, or at least retail traders around the world. So don't let anybody fool you. No one is smarter in this market. Just get the right skill. Just get the skill. That's all. All right. So set realistic goals. Once you do that, you will notice that trading becomes easy. It could be 2% per month. It could be 5% per month. It could be 10% per month. Just get your mind right. No wonder they said trading is 20% skill. The remaining 80% is your mindset, your psychology, your mindset. Let me put it as mindset because psychology sounds cliche, right? So let me use mindset. So you're chasing bigger numbers. Because of that, you will definitely blow your account. And of course, if you're trading $100 account, definitely you will be blowing account because of course you want to flip it. I don't even blame traders like that because even if I'm trading a $100 account, my mindset would be to flip it. I can't be trading $100 accounts and be looking for 2%, 5%. No, I can't do that. Doesn't make sense. All right. So, but if you get your mind right, you know that, okay, you want to take on capital. If you cannot access capital from investors, which I'm going to talk about in the next slide, in the next couple of slides, prop firm is there. At least you pay, they give you the account. Point blank period. Just go with a reputable firm. All right. Then number two, which is what I just mentioned, leverage on prop firms. If you don't have capital, if you are not a trust fund kid that has some money saved up from your rich parents, then just get prop firms. They are risky, I know. Some of them have gone under on me, but the focus is at least make some withdrawals before they disappear, right? At least that way you can raise capital and invest in your own personal brokerage account that may not disappear on you if they are regulated properly. But this is the fastest way to get funding. All right. Then for you to be able to even trade profitably, you need the skill. And trust me, I've always said this, even in my YouTube videos. Of course, I want you to pay me or pay for mentorship. That will shorten the gap. But you don't even need to. I'm a living example. I've never paid for mentorship in my life. Of course, it took me years and I was in it, all in. All in. All right. I think I've talked about this story a little bit in details, but today's session is not going to permit me to dive in deep. All right. So you can actually, if you're well invested, well interested in learning this, go through the pains, the tears, the sweat, the blood, right? You are going to get it right. Though it may take you longer, but it's absolutely fine. It doesn't matter. Just get the skill. Whether you pay somebody or you do it on your own, get the skill. Very, very important because you can't trade prop firms successfully if you don't even have the skill. You can't have the right mindset if you don't have the right skill, right? So, but there's something else I like to talk about, which is risk management plan that ensures consistency. Now, remember in the beginning I talked about no one is bigger than drawdowns. No one is bigger than drawdowns. In fact, I think statistically, you always find yourself in a drawdown most of the time. But with a good strategy, you'll be able to come out of it and be profitable. But most of the time, it's just like life. Let's talk about life a little bit. In life, the pain we experience is usually more than the happiness. Simple. Today, one of your friends passed away. Tomorrow, you are applying for a job which you thought you would get and you didn't get it. Next tomorrow, your rent is due, your bills are too much, you cannot meet up with your rent. All these things are pains. But it's not like you are not living above the pain. You have that good day whereby one money is just going to drop into your account and you are now able to pay your bills, stay afloat, live to die another day. So even in life, we experience more pains than happiness. No matter the level that you are, we experience more pain. That's why we need more money because more money gives us more option. But you experience more pain. It could be your health. It could be someone dear to you. It may not be you, but someone dear to you suffering from one major health problem. Now you have all the money in the world, but you are still in pain. So in life, we experience more pain than when we are happy. Just look at the market like that. So we experience more drawdowns. By drawdown, it could be, hey, you're in drawdown, no profit. Or maybe you were in profits, you were 10% up, but you came down to 2%. You still feel that pain. So it's absolutely normal in real life and in the market. So now drawdown, no one is bigger than drawdown, myself inclusive. It's the mindset and your strategy that is going to take you in and take you out of the drawdown. So there's a way I apply risk management to make me stay afloat, right? The first thing I do is I risk 1% per trade. I'm not talking about the swing aggressive strategy. I risk way more on that. I talked about that last week. But for my normal, when I'm funded, I actually risk 1% per trade. I risk 1% per trade. But when I go, it's just simple mathematics. When I am in profit, I maintain my risk management plan, which is 1% per trade, or on my personal account, which is not prop firm, I even add more risk since I have created that buffer for myself to play around with. So I add more risk. But most importantly, when I'm in drawdown, that's what I want to emphasize on. When I'm in drawdown, usually let me use prop firms since that's what most of us trade. So on prop firms, when I am 4% down, what I do is I reduce my risk. I risk 1% per trade. But when, let's say I go into a 4 losing streak and I'm down 4%, what I do is I slash my risk in half. So which means the next trade, I'm going to be risking 0.5%. Let's say I lose that trade, so which is the 5th loss on a bounce. The 6th trade, I'm also going to risk 0.5%. Let's say I lose that 7th trade, I'm still going to slash that risk because now you are in a hole. You need to give yourself time to crawl out of it. You don't want to blow the account. But after those 6 trades, I'm still just 5% down. I still have 3% to play with. So which means I'm now going to divide my risk into 4. Remember, I originally risked 1% per trade, so I'll divide it into 4. So the next trade, which is the 7th trade, will be 0.25% risk. I know I'm already aware that I'm in a hole. I'm not in a hurry. Let me crawl out of my hole. I dug it for myself. I got into it. Let me give myself time to crawl out of it. It's all mindsets. Don't be in a haste. So that's the little risk management. Though it's deeper than this, but I can't explain all of these details in one video, right? So that's my risk management game plan when I'm in a drawdown. There are other angles to this. I may look for a swing trade that I can hold for a couple of weeks that is going to move significantly, and I'm going to crawl back out of, all of those things are there. But like I said, there's no much time to explain all of that. All right. So let's talk about how to access trading capital. Number 1 is proprietary firms. You already know that. Please, if you have any question at any point, just jot it down. All right. We are nearing the end of today's session. So number 1 is proprietary firms. We already know that. If you don't, please just send me a DM. Maybe I'll organize a fresh webinar that explains everything prop firms, the pro, the cons, and all of that. I'm going to explain that. That'll be a different webinar entirely. Then another way to do this is investors. Now, when you have the skill and you are now a good trader, a profitable trader, people will naturally throw money at you. Even in the beginning, before I became profitable, people throw money at me. People will give me, back then, I take what is within my limits. People give me $100, $200, $300. They were poor friends like me, right? So then they will give me a couple of bucks. The good thing I did back then was tell them that, hey, there's nothing certain in this market. I could blow this money. Are you cool with that? And they'll say, yes, okay, fine, let's go. And guess what? I'll blow it. Some of them are still not talking to me till this day, even though I've paid them off. Right? But naturally, what I'm trying to say here is people will naturally throw money at you when they see that you are profitable, or when they even think. Let's just use when they see that you are profitable. They will throw money at you. It's natural. The only thing at this point is, hey, don't take on greedy investors. Don't take on investors that will be telling you to give them 50% returns per month. You can't do 50% returns consistently per month. So don't put yourself in that difficult situation. Sophisticated investors are okay with 1, 2, 3, 4, 5% per month. You understand? In fact, sophisticated investors knows that it's not consistent. This month you could do 20%, next month you could do 1%, the following month you could be in a drawdowns. They know that. All right. So number 3 is personal funds. That's if you're a rich kid and you have enough money. I'm not talking about $100. I'm not talking about $1,000. I'm talking about $100,000 and above. Right. So if you have that kind of money, by all means, invest. All right. But first of all, to be able to do all of this, you need the skill. But before I go to the next slide, which is the last slide for today's session, I think some of us have questions. So I'll just take our questions. So if you have any question, just raise your hands. I see Mr. David. I'll just allow Mr. David to speak. Mr. David, you've been allowed to speak. Unmute yourself to be able to speak, sir. Go ahead, unmute yourself to speak, Mr. David, if you're there. Okay, I think he's not there. Let me allow Mark of Dale. Mark of Dale, please go ahead and speak. You need to unmute yourself to speak.
Hello, good evening, everyone.
Good evening, sir.
Yes, thank you, my tutelage. I do appreciate your lectures. Yeah, my question is on the risk management and position sizing. So,
Okay.
if I choose to apply a lot size of 1% in the trade, please, I want to ask, because when I use the position size calculator to do the calculation, for example, if I choose 1%, now I want to ask on that, how many positions can one take? Because the position size calculator will not take the number of positions on that same trade, that same pair. I don't know if you understand my question.
Okay, no. Yes, it's actually simple. It's simple. What you do is you are the one that is going to define your risk, not the position size calculator. Now, the position size calculator will tell you what lot size to use based on the inputs that you feed it with. But what I'm saying is you are the one that defines your risk at the end of the day. You are telling the position size calculator that I want to risk 1% on this trade.
Yes.
That means you define the risk first before you impute it into the position size calculator. So to answer that question properly, you are the one that know what you want to risk. Maybe in a day, for instance. So if your risk appetite for a whole day is 3%, so and maybe you want to take 3 trades, so you know what to do. You risk 1% on this trade, 1% on the next, and 1% on the third trade. You understand? So at the end of the day, you define that will be 3%. Yes. So you are the one that is going to define your risk appetite. So if your risk appetite is 3% and you want to take multiple trades, then spread that risk appetite across those multiple trades.
All right. It's all right. Okay, thank you. Thank you.
You're welcome, sir.
Yes.
So I'll go with Mr. or Miss Bumi? Okay, allowed to speak. You've been allowed to speak.
Yeah, good evening, bro. Are you okay?
Yeah, I'm fine.
Can you hear me?
Yes, loud and clear.
Yeah, okay. Yeah, thank you once again for this webinar. It's very informative. The question I was about to ask was the same question the gentleman just asked, that how many positions can you open if you have 100,000 accounts and you're doing 1%? So how many positions? But you just explained that. So thank you for that.
Okay, sir. So just to still buttress on that is this. So for me, per trade, I want to go with 1% risk, and I only trade one position. I'm not you. I don't know if you've noticed, but Personally, I only open one position. I don't open multiple positions. Never, like, I can't remember when last I opened multiple positions. So I actually don't. It's just my style. So once I'm in one position, I'm in that position. But let's say I want to open multiple positions. Say I want to open like 2, 3 positions. It's not bad. It's just my own personal preference. I like to just manage just one position. So once I'm in a trade, that is the trade. You understand? So what I do is this. I let's say I want to risk 1%. So what I do is I will, and I want to open multiple trades. So it depends on how many trades I would have loved to open. So let's say after my analysis, I have 4 pairs that I am looking at. I have 4 pairs that I'm looking at, for instance. So if I have 4 pairs and I want to only allocate 1% risk, so which means I'll risk 0.25, 0.25, 0.25, 0.25 across all the pairs. But since I only trade one, I go in with all my risk on that one. But if I'm looking at multiple pairs, I will allocate that, I will divide that risk properly across those pairs I'm looking at. So I don't know if that's clear, sir.
It's very clear. One more question I'd like to ask is, for instance, if you have, let's say, 15,000 accounts where the drawdown is about 13% or so, I think. How do you work that out? I mean, okay, let's use a 6,000 account on funded next. You have a 6,000 account, and the drawdown is what, 13%, which is about what, 800. So how do you deal with that? That you don't lose that drawdown?
Okay, it's simple. Once you, yes, I get the question. So actually, it's simple. When you have a good strategy that you've back tested, and you can tell the profitability of that strategy, not just even back tested, you probably have been trading it for quite some time. So you see the potency of that particular strategy. So it becomes easy. Let's say the base one drawdown is popularly 8% across most prop firms, or 10%. So what you do in that case is you don't keep risking 1% cross board. Like, you are going into drawdown, you keep risking consistently the same amount of risk until you hit your maximum drawdown. You don't want to be doing that. So you should have a break point where you now start readjusting because we cannot just have losing streaks consistently. We're also going to have winning streaks. Losing streaks is not just so you just be having losing streaks to the end of time so you blow the account. No, you can have 4 or 5 losing streaks and maybe have 4 or 3 winning streaks after that. So now the idea is, when you get to a particular point in drawdown, you now want to slash. I already explained this earlier. You now want to divide. You want to slash your risk in half. Just do the maths and look for your sweet spot, because what works for me may not work for you, right? So for me, dividing it in half after 4% down works for me. So when I divide it in half, I take the next 2 trades with that 0.5% risk, because I go in with 1% until I hit 4%, negative 4% on my account. So the 5th trade, I'm going in with 0.5%. The 6th trade, I'm going in with 0.5%. And let's say for whatever reason, I still lose those 2 trades. Remember, those last 2 trades is just 1%, because originally I was risking 1%. Now I've divided it in half and I still lost the next 2 trades. That's negative 5%. I'm still going to slash it in half again. Then when you are now getting your winning streak, you will now keep increasing your lot size up. So let's say you have 1 winning streak. The next trade is going to be 1% or 0.5%. Then, based on my analysis, 0.5%. Then you win again. The next trade is going to be 1%. You now find your way back up. So that's how to do it. So just look for a way, depending on your trade frequency, your strategy, and all of that to balance how you allocate your risk when you are in drawdown and when you are in take profit. That's what keeps you afloat, not just the skill, not just the execution. You need to be able to look for a way to balance risk management to stay afloat.
Yes, thank you so much for that. I really appreciate that. Thank you. Thank you.
You're welcome, sir. That's why they say journaling is, at this point, I really don't even journal anymore, but that's why journaling is very important. So if you journal your trade, look at your losses, all the losses that amounted to you blowing that account. Now think that, okay, if at this point I actually now slashed my position size and all of that, and I did this instead, how would that have fared? That's how to look for your sweet spot. So in the beginning, if you're looking for an airtight strategy that works hand in hand with your risk management plan, you need to journal. That's the way you use your data to gauge what you should be doing going forward. Everything is in your data. You should have it data. So yes, we are nearing the end of today's session. So if you have any, okay, I still see some hands up. We'll take, I think I allowed Mr. Emeka to speak earlier, but no. You are not able to speak, so I guess you're struggling with your mic. All right. So once again, don't forget when you are. Okay, good evening, Mr. Emeka. Nice to have you join us today.
Yeah, it's been a while. I've been out of media space for 1 or 2. So quickly, about prop firm, there's, just like you said, you're going to do a webinar, please. Maybe you can make a video, because I see that the prop firms you trade, they are all connected to copy trader. Why the one I have, they don't allow copy trader. If you can do a video and make a list, the ones you can suggest to your people like us that allows copy trading, you understand? Because I really want to switch from this now to other prop firms that allow copy trading. So if you're doing the webinar, please put it in mind, or a video that can give us list of prop firms that allows copy trading. So that's just it. Thank you very much.
You're welcome, sir. So just to be clear, most prop firms allows copy trading. So the copy trading they are talking about is when you are copying from someone else. And the trick is this: when you're copying from someone else and both of you are on the same prop firm, they may flag that account. So they see the same entry, the same exit, the same entry time, the same exit time, whether TP or stop loss. When they see that, and you get both of you, the person you are copying from or the person copying from you, are on the same prop firm, they are going to flag that type of account. But if it is your own personal account, you can copy. Of course, there are slight differences. Some will say, hey, you have to use our own as a master account, which I don't think, that was like 2 years ago. I don't think that still works now. As long as you are copying from your own account, let's say you have a prop firm account with E8. Let's say you have a prop firm account with E8 and you are copying to your funded next account that is also your account, they won't flag the account. If they flag it, they are just trying to dupe you out of your money. But as long as you are the one trading those two multiple accounts, you can copy. And another way to find out is you can even chat with, excuse me, let me take water. So you can actually chat with these prop firm guys. I usually do it even till this day.
Okay.
So if I'm trying out a new prop firm, I let them know that, hey, can I copy from this, my other prop firm accounts to this? I want to know now. And I screenshot that conversation so that if they want to act up in future, I can show them that, but I asked you and you told me yes before I bought the account. So please don't give me this crap. I've had to fight some prop firms that wanted to act up with me like this before. Though they would still have gone with my money if they wanted to, but I told them that I'm going to cast them on my platform. And because of that, they fell in line.
Okay.
But you can
Thank you.
actually, if it's not a scammy prop firm, if you can actually copy from your own account, they don't restrict that.
Okay.
You're welcome, sir. Oh, sorry. So I'll take one more question before we round up for the day. So I still have one or two things to say. So I don't know, Selom, you've been allowed to speak. So please go ahead and ask your question.
Hello. Good evening. Can you hear me?
Loud and clear, sir.
Okay, good. I've been having this issue for a while now. I don't know if it fits into this discussion, but I was hoping you could help me address it. It's a personal issue.
Okay.
I've been learning trading for a while now, and I think I'm getting good. I'm getting okay. But I have this issue where I exit my position prematurely. Let's take today, for instance. I caught the Euro US dollar move today, and I entered the position last night, before the thing could hit my TP. I got out, and I've been doing that recently. Sometimes I take losses, sometimes I even take break even. I don't know if you could help me address that.
Okay, actually I can't, because this is the reason. I usually say you should when you have a system that works, you need to have a system. And that is why, backtesting sounds cliche and all of that, but it does work because, number one, it provides you with confidence to execute on your strategy because you've seen how it performed in the past. Then, secondly, again, it helps you know the reality of your strategy. So now, why you're getting out of trades too early or prematurely and all of that is because you probably didn't define your position properly. So what I mean is this: maybe you got in randomly, you place your stop loss, of course you place your TP. How do I explain this in the simplest terms so that we understand? Okay, let me put it this way. When you have a system, you already know the reality of your system. You already know that, hey, after X amount of trades, I should be profitable. Through losses and winners, I should be profitable after this X amount of trade. Now, that is your reality. You already know that, hey, it either goes to your stop loss or to your take profit. Or if you are the type that breaks even and all of that, when you break even over this amount of trade, okay with I'm still profitable. This is the reality of my data. Then you already have a data. You just execute based on your rules. So whatever happens, you see, when you have a set of rules, what it helps you achieve is this: that regret, that anger, that fear disappears. So now, if maybe you have it in your rule book that when price moves X amount, I'm going to break even. And then price still reverses and stops you out at break even and still goes to your TP, you won't be mad because it's already in your rule. You have your data right already. You won't be mad. You know it's part of the game. You're already aware that if that happens, it's fine. Because, of course, you should be angry that, whoa, you stopped me out at break even and still made it to my take profit. You should be, naturally, as humans, we'll be mad. But if it is your strategy that you've backtested, doing all of this, you already know the reality. You know it's part of the game. There are times that it's going to stop you out at break even and still go to your take profits. You will not be mad. You know it's part of the game. You understand? You know it's part of the game. And if your strategy is a kind of strategy that once I'm in, it's either you hit my stop loss or my take profit. Now, you are not mad. You know that when you are in the trade, it has to hit take profit or stop loss. So even if it goes close to your take profit, reverses and goes to your stop loss, you shouldn't be mad because it's already your game plan. So it's all about game plan rather than what is going on in the market. Because to be honest, how would you know that, hey, if you hit your break even, it will go to your take profit? If you know, then you won't even break even. You will just let it dry, right? Because you already know. But because you don't know, then you need to focus on what you know, which is your rules. So if
Okay.
XYZ does this, I'm going to do this, that, then that's what you live by. You understand?
Okay.
Because it's dangerous guessing your way in the market. If you keep guessing your way, you will not get your desired results.
Okay.
So I hope that's clear, sir.
Yeah, that's very clear. Thank you.
All right, okay. So we'll be, for conclusion, we are going to be having our next webinar same time next week. The topic is going to be communicated in the group. That will be the last webinar before our next mentorship program. So if you want to be a part of it, you know the drill. And if you also don't want to be a part of it, maybe because of financial constraints or you're good, it's still absolutely fine. But I just want to appreciate everyone for tuning in to these webinars. I actually enjoy it because you don't get to have many friends that talks about Forex around you. All right, don't get so you want to build your own village, you want to build your own community, which is what we are doing. And when I held last week's webinar, I was wondering, so why have I not been doing this more consistently? Because I noticed that I get to enjoy myself during these webinars, right? So we'll be seeing more of these around. I'll be communicating, but for now, our next webinar is coming up on Wednesday. That will be the last before our session. Then the next webinar after that is going to be communicated with everybody. But look out for the next topic. And I actually want to appreciate every one of us for finding time to tune into these webinars. I really appreciate you. It's not just me giving out the information. I'm also having a good time having to chat with all of us. And thank you once again. And that will be all for today. The recording for today's session is going to be available tomorrow for those that joined late. So look out for it. And if you have any question that I wasn't able to answer in today's session, is because of time constraints. So please bear with me. You will be the first that is going to be unmuted next week. All right. So once again,
Sorry,
thanks for
bro.
tuning in. And
Question.
I'm going to. Oh,
Sorry, please.
okay.
Please, I'm
All
sorry.
right.
I
Okay.
wanted to find out about your discount on the next funded next.
Yes.
Is it discount or what? Because it's not actually working when you try to put it in.
Okay. Yeah. The discount is not on the cash now. The discount is from the percentage they refund back to you. You know, these prop firms, when you
Okay.
purchase an
Okay.
account, when you purchase it, they are going to, when you make it to your first withdrawal, they are going to pay you back the money you paid for the challenge. So this time they're telling you they are going to pay you that amount. They'll pay you more than what you paid for the challenge to the tune of that
I mean on your coupon.
110%. Yeah,
I
that's the
mean on
one
your
I'm talking
coupon.
about. Yeah,
Oh,
that's
okay.
the one I'm
Okay.
talking
Okay.
about. Yes,
Okay.
that's the one
Okay.
I'm talking about.
Thank you.
Previously, they were giving the 10% coupon. You could choose what percentage you want to give to your community.
Yeah.
But for whatever reason, they stopped that. So they sent out a circular for
Okay.
this instead. Yes, so that's why I
Yeah.
communicated it with the group.
Okay.
Yes, sir.
Okay. Thank you so much for that. Thank you.
You're welcome, sir. So good night, everyone. Have a fantastic weekend ahead, and I'll see you in the next webinar. Bye.